Is it possible that this could actually cause people to say, hey, I better jump in now before rates keep climbing?
Well, you're right to divide it between refinancing and purchasing, because refinance is just an execution of an option on interest rate differentials. So you can do that without moving your family.
Right.
It's a bigger issue to buy a house, because then you're going to move your family and your household. So that action tends to be slower. If you were at the margin of making that decision, it's a good chance to jump now. So people who had gone through the process of finding a house, finding a mortgage that they like, a lot of them will have locked in an interest rate and jumped.
Right. So what do you guys see happening with the market as we get into the fall? Because anecdotally, there's a lot of talk about a lot of inventory coming on the market, maybe a little bit of a delay. It wasn't that great of a spring, but it could be stronger now. Is that, you see that or no?
We don't actually see a lot of pickup in the purchase side of the equation. And the problem is the same problem it's been for the last 3 or 4 years, which is lack of supply.
Still, wow.
Yeah, at the entry level, actually, if you look within a market at how fast prices are changing at the high, middle, and low level, in every market you look at, they're changing fastest at the low level relative to the middle and the high, because it's that entry-level buyer that buys there.
That's where all the demand is, and there's not enough supply.
It's the millennials.
So what happens to refinancing now? I mean, there was a major wave a couple of years ago. What do you think happens with now this backup in rates?
Well, we've seen a big jump because remember, at the beginning of the year, rates were 100 basis points higher than they are right now.
Yeah.
So there's still an option for a lot of folks to refinance. So we would expect to see that work through the process. One of the things you'll notice is that the spread between the 10-year Treasury and the mortgage rate on the street has gotten wider recently. Part of that is because nobody expected this extra wave of refinancing, so they're trying to hire people back. If you don't have enough volume, enough people to do the business, there's no point in lowering rates. You couldn't do it anyway.
Wow.
So the spread is, to some degree, managing that load capacity issue.
So basically, people could get even a better rate on their refinancing if there were more people working in the industry to make that happen.
That's right.
That's pretty shocking.
Part of the spread is also the fact that people are prepaying on their existing mortgage, which raises the risk premium.
Yeah,
and
investors don't like that.